Welcome to the Real Estate Show on KMED. October the 21st is our date. Pete Belcastro and Joe Brett, the real estate guys, with you here today on KMED. We're both real estate brokers with John L. Scott in Southern Oregon, and we get together with you once a week here on KMED to talk about all sorts of real estate-related issues and topics. And, well, through over 400 shows, we've never run out of things to talk about, and today is no exception to that because, Joe, we got two of the, experts, as we say, of our guests into the house today, and that is Brad Bennington, who's the Executive Director of the Southern Oregon Builders Association.
Howdy.
You know, Brad's been with us many times in the past, along with Guy Giles from Bank 34 Mortgage, who presents today's show. Guy,
Hey.
First of all, welcome you guys, and well, tell what's going on. First of all, it's nice to see you. How you doing?
Oh man, we're good. I'm kind of loving these trees and watching the seasons change and
The fall colors, as they say.
I'm ready for my new house and seeing how the water's going to treat me
Yeah.
out in my field.
And tell us what's going on in the loan world, the mortgage interest world, the mortgage world.
Well, a little bit of everything right now. All I had was a bunch of purchases going on up until about 2 days ago, and now I've got about 4 people calling wanting to do refinances. So we're a little bit of mixture right now.
It seemed like it slowed down a little bit, in October, the first part of October. And then one day there was no new listings on the Ashland office meeting, a tour meeting, which is really rare. So, okay, but what do you?
After having my best year this year, I felt a little bit of a slowdown too for a couple of weeks, and I was wondering, it's funny. You're either trying to get it or you're trying to close it.
Yeah.
And
all right. And what are interest rates? What are you telling people today? The ranges that they can look for here in the latter part, really, of October now.
Well, the ranges are right around the 4s right now with decent credit. I can get people down in the 3s sometimes. Definitely on the government stuff, you're down in the mid 3s, but they're holding on really good. I am getting a lot of phone calls right now. Oh, the Fed's going to raise rates. The Fed's going to raise rates. And I always say that, by the time the Fed raises rates, it's generally already baked into the mortgage rates. When the Fed raises them, that has to do with your credit cards, home equity lines of credit, things like that. It doesn't have to do with your mortgages, but it is an overall, hey, we're watching inflation or somebody's watching inflation, and it really just depends on where the investors can do the best. And right now, they're still putting a ton of money into the stock market, and it feels like, the home loan rates are staying pretty good too.
Well, I think as long as they do, I think we're going to continue to have a market the way we are. If they climb, as we say, we start climbing higher, then things all change. All bets are off then.
It will a little bit, but then you got to figure also if that's happening, then your houses are worth a lot more too. So, there's always good and bad with everything.
Are you seeing any kind of difference that people are seeking right now? We've gone through the whole gamut with you over these years, from FHA only people we're getting to now. So what's the kind of the mix that you're seeing in the loan area?
Well, I'm seeing either people have just a ton of money down, or they don't really have much of anything down. So, it's everything. I am seeing a lot of 5% down, and if you have a decent credit score, you can definitely, get into a house that works out for you by doing that. Sorry, that changed the tone in here.
Oh, okay. I'm sorry. I'm in the wrong one anyway. That's why I'm hearing different things in here. So that's what they're doing then.
Yeah. I think 2 or 3 of them today were right at 5% down that are making offers out there, and again, and there's a lot of them that are putting 40, 50% down. Just depends on your situation at the moment.
Depends on the situation. You're seeing everything around the valley. There's nothing. It's kind of spread apart right now.
It really is. I think a lot of the rural properties, they're still just out of reach for most people. We're kind of hoping that, and this is going to be an awful thing, but it's how I feel. Maybe some of these guys that have come in here for the gold rush will go broke next year, and there might be some of those properties a little cheaper.
You're talking about the cannabis world around us. Well, it's certainly the gold rush has slowed. There's no question about that. It's certainly raised prices in rural properties, but boy, people are still wanting them, and those that have, that are able to find them. You're right about that.
Yeah. So who knows? But maybe some of those people will move a little further south. And by the way, it's a little cheaper down there in case you want to.
I wonder what's going to happen. Here's a thought. Those terrible fires down around Santa Rosa, Napa and Sonoma counties, and those are horrible. I can't believe how many times we see this in California. Just in our own lifetime. The Oakland Hills fire, by the way, was this week, 26 years ago, if you can believe that. I remember the San Diego fire a few years ago, the Lake County fires a few years ago. Does that have an effect on our real estate here? Think about that. I wonder, especially the wine country, that whole thing. Well, I wonder if that's going to affect what we do here.
I would assume there would be a lot of people that'll take their insurance money and try to move up here. I haven't really seen that yet, and a big portion of the people that I deal with are people moving from out of the area. But it's not like all that charred land is going to be pretty next year, even if you do rebuild your house. So I'm sure a lot of them will be trying to get out of there and driving up the construction prices too.
Some of those pictures of the subdivisions, those were
gone.
Half a square mile of just ash where houses once stood.
That obviously affects when you think about the construction industry around us, and that's maybe a good time to bring our good friend Brad Bennington into our discussion.
Howdy.
Because that's going to really affect. I can't even imagine the demands of rebuilding and the construction trades and all the kind of things that are results of that.
For labor there.
Pete, so rewind. First of all, I want to thank Guy for inviting me to be here today. Most people won't invite me to be anywhere, so Pete,
we'll let you come in anytime.
Nice to see you and Joe again. But you got to rewind back even a few months before that, and you got to remember, the storm that hit Texas.
Right.
The tag for that estimated is $300 billion plus, just for the damage in Texas. Then you got the damage in Florida, right?
Yeah, right.
So that's a couple $100 billion there and counting. And then you got and you might not think that this matters, but it does. But you got the damage in Puerto Rico.
Oh, absolutely,
right?
Yes.
And now you got all this fire. So what this is these events cumulatively are going to put a demand on building materials that is not currently available.
Right.
Right.
Yeah.
So for material that's already in the pipeline, what I can tell you, the short answer to all this is everyone on my side of the fence expects to see a substantial increase in material prices and a substantial lowering of availability over the next 12 months.
Really? Okay.
Yeah. There is not enough production available to satisfy the requirement to rebuild anywhere near the amount of damage that's happened in the last 6 months.
And the rebuild is the key. We're geared up for the new construction, for the normal market of building and growing ahead. But when we got all this catch up to play now, that obviously would tax the system.
Well, yeah. Joe, the thing is really we didn't even have enough capacity just for our normal pace of building. Like for instance, after being in business for I think 40 years, Rough and Ready over in Cave Junction shut down this year, right?
Right.
So after tap dancing as long as they and I can't tell you how many tens of thousands of board feet of lumber that I bought from Rough and Ready and many others as well. So we had a situation where we were already struggling just the material pipeline for the amount of work that we had, and now you pile all this other damage repair on top of it, and it's going to be consuming building materials and building labor.
Yeah.
We've got to have human beings, to do all this. So it's going to have a substantial impact on our industry.
Yeah. Well, by the way, the 3-month period, just to show you how busy it is here, just in our own valley, those MLS stats show, Joe, 111 new homes in that 3-month period of July, August, and September. And the median price in Jackson County for a new home right now, it's $330,000. It's up 52% in 5 years. I mean, you certainly.
Well, yeah, but we, those of us in this room, we predicted this 6 years ago.
Yeah. Oh no, I agree with you there. But it's here.
So unfortunately, we were right.
But boy, it's rising. Why is it? Okay, why is it rising faster? Why are the values? Well, they haven't really risen as fast as the. Go. What?
Government regulations and additional costs.
I was going to say they've risen. I was going to say new homes have risen faster than regular homes. Just resales.
The cost of the land to build on them was cheaper, much more so before, and that's all been scooped up.
Yep.
Brad's taught me well on this subject.
Well, what's happening is that at $329,000, you're certainly pricing a lot of people out, for new construction.
That's the downside.
That is the downside to that.
And I'm actually surprised. I thought that median price was even going to be a little higher. So.
Well, I'm thinking even if you're not priced out, I have a couple that, a young couple that came and met with me last Saturday that They want to build about a $650,000 house in Ashland, which you'd think you should be able to do that pretty easily. And the word that we're getting right now is that, yeah, somebody can help them, but it's probably going to be about 2 years before they can get this thing done. And that's, I mean, how disheartening is that for somebody with...
Go back. 2 years to just find a construction somebody to do
that's
it?
kind of the numbers they're being told from start to finish when they'd actually be able to move into after building and after going through all the government stuff and after getting your permits and doing everything you have to do. And I would think that they'd be in a pretty good position to build a house. And, and maybe, we're trying to work something out a little faster than that, but that was the word they'd gotten so far.
2 years. 2 years. Think of that. Would you spend 2 years?
Unless you've got your own crew and can build it yourself, pretty much that's what you're up against, I'd imagine.
I don't know.
Yeah. Well, we those of us in this room, we know that this all started back in 1972 with Senate Bill 100, which became LCDC, and now Oregon is the most land use regulated state in the entire nation. So we kind of did this to ourselves. For instance, if you went down to the automobile store, if you wanted to buy a new, Volkswagen or a new Chevy or whatever you want to drive, and they said, "I've got really good news for you. We're going to build your car just the way you want it, but it's going to take 2 years to get it." Right? So, give us a little bit of money. It's going to take us a while, but because of government regulations, it's going to take us 2 years to build your new car. So you need to order it 2 years in advance.
Well, not many people are going to do that, and I think that's a detriment to head.
Yeah.
It sounds like there's a lot of clouds on the right now, which is the horizon of new construction, which is really high right now around here. But there seems to be a lot of clouds out here on the horizon that are not going to be able to control by you or anybody, are they? These market forces that are out there in this.
Yeah.
Right.
Hopefully with all these fires, I mean, it's sad that we had them, but maybe there'll be a little bit more of an appetite to let some people up into the woods and do some good forest management and cut some trees that we desperately need, and the forest would be healthier. I mean, it just makes sense to me.
Well, there's lots of those are all issues, and how people talk about those, and I don't know the answers to those, but it affects us. It affects everything that we do, and I just can't imagine being there and experiencing that. Well, who knows where we're going to end up from here. I'm just concerned that all the new construction going on right now, and you're talking about the weights, you're talking about the prices, materials going up.
Yep.
I mean, it seems like that's really that doesn't bode well for us.
That said, I think that it'll all speak to a pretty healthy market around here. I mean, I don't think that's going to make our house prices go down anytime soon. So I think if you're going to buy here, if you're looking to buy, it's probably not a bad idea.
Yeah. What about contractors? How tell us that status, Brad? I mean, you've been here before, and you've moaned about the enough subcontractors, not enough contractors, that whole thing. Has that changed as we're sitting here in the middle of October of 2017?
No, actually, it's gotten worse. So the good news is for customers that come to a guy and they found a house that's already existing and they want to buy it. I mean, he can probably push that through about as fast as anybody can.
It's pretty easy
if it's existing. Yeah. But it's actually it's more difficult. New product is more difficult. And and after January 1, 2018, it's going to get more difficult because the state of Oregon has just upgraded both its structural and its energy code.
Oh, yes.
So as difficult and as time-consuming and burdensome as things are right now, in a couple of months, it's going to get worse, more expensive, and take longer to do. For no other reason except the government just decided to do it that way.
Well, they're on a program. California, the way I understand this thing, California and Washington have already implemented these types of restrictions, these types of, what would you call them? Regulations, I guess, on the construction industry, right? They're already there in the two states. They're coming here, right? And this is what looms ahead for us. And all new construction, by the way, commercial construction, new homes, apartments, all of this is coming our way, correct?
Yep.
And it's going to add cost to it. I do understand that. It's
not a little cost, a lot of cost.
A lot of cost.
A lot of cost for very
upfront cost.
A lot of upfront cost, right? So when someone comes to Guy to buy a house, when they come and see him in 2018, a couple months in 2018 to buy a new house, it's going to be significantly more money for no other reason than what the government just did to the building and energy code.
Mm-hmm. And I know you don't like those.
Well, the thing is, people on my side of the fence, we believe that housing should be affordable, safe, and sustainable. But we also think that, the affordability part is kind of important because, I've said this for years. The good news is we're building the best housing that mankind has ever seen, but the way things are going, pretty soon the only one that's going to be able to afford to buy it is Bill Gates and Warren Buffett.
That rate.
And that's not going to be very helpful.
No, just have to have. I agree with you. It's about the affordability issue is not addressed anywhere, is it? Wasn't there a big meeting, Joe, recently in Medford or something about housing? There was a commission, or wasn't there something about that?
They're working on it and trying to just kind of formulate a vision for how they might be able to stimulate some things. One thing I know the city of Medford is doing is taking some of their downtown parking lots that they own and offering developers incentive now to come in and build above them. So you get some commercial development, first of all, but you also have some residential units in there. So they're trying to find ways to stimulate that. I'm a person in my late 50s. I'd live downtown when my life simplifies in a few years. I'd live in a smaller place downtown like that.
Well, yeah.
But those are the kinds of things I think we're going to have to find incentives and find ways to get developers into the game.
It's called alternative housing.
Yeah, exactly.
Alternative housing for seniors, for all sorts of young couples, first-time buyers, etc. We've got a break coming up here on the Real Estate Show. We're coming right back. We're with Brad Bennington of the Southern Oregon Builders Association and Guy Giles from Bank 34 Mortgage. We got interest rates. We've got new construction, all sorts of things. We're coming right back after this. The Real Estate Show rolls on KMED. October the 21st is our date. Pete Belcastro and Joe Brett, the real estate guys, with you. Don't forget, you can check out any of our past shows at realestateshoworegon.com. They're all available, and some terrific shows in the past. Everything from travelers' accommodations, investing in those, to home warranties. Last week, a couple of weeks ago, that electrical issues, with Kimberly London, Joe. She's really good about. I've learned more about permitting and what you do and do not need for permits by listening to her. And they're very smart.
And how easy it is to find out the information on permits in a given property that you're representing as a listing agent or representing a buyer as purchasing. It's really easy to get a hold of the city of Medford and find out if things in those remodels and things like that have been done properly and permitted properly.
I think one of the hardest things right now is finding people who can come in on repair addendums, and have a list of, here there's 10 things that need to be fixed on this house before it can close, and finding people the time again. You talk about building and construction, try to find people to do those types of things in a timely fashion and get them done and have knowledge and can do it. Yep. They're just not there. That's a problem, boys. We're with Guy Giles, by the way, from Bank 34 Mortgage. He's our resident mortgage expert here on the Real Estate Show, along with Brad Bennington, who's the executive director of the Southern Oregon Builders Association.
Howdy.
I want to ask Guy about just a quick question about FHA loans. Now, Joe, remember it wasn't that long ago when Guy was telling us that most of the loans they were doing were FHA loans, and people just were clamoring them. Then they put in, this mortgage insurance for the life of the loan, and things seem to go sideways. So, what is the status today, Guy, of FHA loans, and should people still consider using them?
Yeah, it really depends. If you don't have a great credit score, then FHA just does not hit you very hard for having a little bit of a lower credit score. So. That said, with housing values going where they are right now, the FHA limit in Jackson County is $280,600. So you can buy a little bit above that just by whatever your down payment is. So if you have the typical 3.5% down above that, you're just a hair over $290,000 is what your purchase price. What
if I had a client who was going to spend $350,000 and they wanted an FHA loan?
Well, first of all, I would do everything I could to get the person like that into a regular
loan first. Okay.
Yeah, because the mortgage insurance is forever.
Okay.
It gets really expensive if you have a bad credit score. I'm not a credit repair place at all, but we're really good at looking at people's credit, and we can do a rapid rescore, and we can try to get somebody's credit score up. I've done that a few times this week.
So you really want people, it sounds like, to come to you for an FHA loan to be around that 280 mark, right? 280, 300,000 mark? Is that what you're kind of saying?
As far as their purchase price.
The purchase price.
Ideally, if they could find something cheaper than that. But yeah, that's kind of the maximum as far as that goes. They allow for a little bit higher debt-to-income ratios. Why, I'm not sure. But they do to kind of he hit a little bit of the market that maybe isn't served as well by the conventional loans. So
And
there is a place for it.
And do conventional loans, you can put 3% down, right, on conventional loan
You
now?
can. There's a slim little sliver of land right next to the freeway that don't have any income limits on that 3% down. So, again, we're running kind of up against a wall on that, where there are income limits on that. It's basically the median house. The median household income is what you can have for that program, and if you're over that, then you're kind of stuck. And that was when we were looking at the Chenoa Fund for other people.
Because you had a loan of 0% down. Conventional.
Yeah. It's that Chenoa Fund. The rate's a little bit higher. Again, that's not my first choice, but it's definitely it's fit in for a couple people that have allowed them to get into the game.
Well, the bottom line is that you've got options for people.
Yeah,
a lot of options.
What I really suggest is people come in early. If it's you don't want to come in like today. I literally got a phone call from a guy, and he was pre-approved with another bank here in town. Mm-hmm. He got into contract, and they told him, I don't know how long he's been in contract, that guess what, you have to come in with an extra $60,000, and he doesn't have that.
Wow.
So we're trying to figure it out, and I can't solve necessarily problems like that. I'm not to the bottom of this one yet to know if I can help, but when you're in contract isn't when you want to try to repair your credit. It's not when you want to, figure out all of the stuff that goes into doing a home loan.
I think most agents today are asking, buyers, if they would call you or talk to you, or we're going to go look at property, you need to be pre-approved or pre-qualified.
Yeah, and
otherwise you're going to find something you like and you're not going to be able to get it. Are you still seeing the multiple offers, that kind of thing, coming in those lower price ranges between 100 and 250,000?
All day long.
Still happening there.
Yeah, and I have a few different things that I try to do with the real estate agents that I work with to make us look a little bit better than the next guy, and especially if you're using an out of town lender or somebody like that. But yeah, it's just good to come in early, get fully credit pre-approved, not just pre-qualified, so you're really ready to go.
Your experience will be a whole lot better in the end, that's for sure. Brad Bennington from the Builders Association is here. I want to give you a quick thing. You just completed your third year now of your home tours, the September home tours.
Southern Oregon Tour Homes. Yes, we did.
And I remember when you first started that. Remember, Joe, he was in here. He was a little bit nervous. They were following what Bend had done up in Deschutes County. We're gonna do this. We're gonna try this here. We think we can do it. It's like taking a risk, like you stick your neck out. But over the years, Brad Bennington does that really well. He sticks his neck way out there, and you haven't had it chopped off yet. So tell us about how that went, because it looked like it was a pretty good success.
Yeah. Pete, we're just so grateful. We had a wonderful response. We've got great builders here in Southern Oregon, and a lot of interest. We think we had pretty close to 24,000 visits over the 2 weekends. We had one realtor called me up, and he says, "Brad," he says, "we're getting 50 people an hour through here." He says, "I've got to get more realtors." So
wow.
So getting back to it's like guys got a lot of people asking him for loans on this and that. There's a tremendous amount of interest in home purchases here in Southern Oregon. People want to live here. We've got. Unfortunately, we have a little bit of a difficulty in availability of housing right now. So, the event was just really just through the roof. Realtors were very happy. The people that came were happy. The builders were happy. So because of all that, we're happy.
Yeah, well, it's always a good thing, and you're going to continue that obviously in the future. That's pretty good. It started with zero with that. And that's become a pretty good event.
Yeah, well, a lot. I have to remind sometimes our friends that regulate us and legislate us how important builders are to the community. But our county, Jackson County, this year, if you look at their budget, it's about a $340 million budget, and property taxes are $40 million of that $340 million budget, and we're the people that do that. It's the people on our side of the fence that do the construction that result in the improvement in the property tax base. So, and that's year over year over year. A lot of those houses we built. Our organization has been here since 1965. So you can imagine how many hundreds of millions of dollars of improvements, our people have built over the years. So building is really, really important to our community and to our county.
And the economic impact of it, obviously, we really believe that now.
Huge.
And we've been doing this for 10 years. It's enormous. People don't really think about it. Well, you're right. Of those 111 new homes that were opened up in this last 3-month period, that's all added tax value that comes into the world. It's supposed to even out, so you don't really supposed to even out over time, but doesn't know if that's true or not. But
on a side note, that as far as them reassessing your house and the property taxes going up, it's triggered when you do a permit for $10,000 or more. So
we learned that.
Kind of keep that in mind.
If you draw a permit from the city of Medford or Ashland or Eagle Point or something, the county is going to go get those permits and pull them.
They see
have
each
an
and every
inspection.
one.
And they see every one of them. You're right, and they're going to come out and have possibility of coming out and reassessing the value of your home. Well, the taxes are out there. We got a break coming up here. Taxes are coming out. I want to ask Brad in the future here in the next segment.
Was that supposed to be a happy note?
Of your taxes? Don't you love? I still love paying my 4-H, the extension service, that $13, and the Jackson Soil Water Conservation District $12. And those kind of things. I have no problem with those.
You see,
let me get those
Ashland,
other ones.
'Cause I get Jackson Soil and Water for less than $6. So
and we talk about property taxes here, and talk to somebody from California. Clients from California, they think they're cheap here. They think that's all. They go, I don't know. I don't know why that is, but we all have a different view. Each state, each thing we do. There's no two places alike, no two sales alike, no two people alike, right? No two clients alike, no buyers alike. Things like that.
Makes for good radio shows.
It sure does. Hey, we're with Brad Bennington and Guy Giles here on the Real Estate Show. Got another break coming up here. We're coming right back after this. Want to find out about the future of building. We hear a lot about zero net energy homes. Hey, they're coming our way. We'll ask Brad about that when we return after this. The Real Estate Show continues here on KMED. October the 21st is our date. Pete and Joe, the Real Estate Guys, with you here. Don't forget, you can check out any of our past shows at realestateshoworegon.com. Our website's there. Got lots of good information, articles, all about real estate. You can also search for properties around there. There's a lot of them out there, by the way. They're up about 5%. This year over last year listings, but boy, the pending sales were like up 11%. So you still drop like 6%, of the whole overall market. That's why it's continued to be pretty much a seller's market in those lower price ranges, Joe. But we've seen the higher ranges, a lot more listings out there, and a lot more. It's more of a buyer's market.
Sellers are coming into the game.
There's more of them, but there's a lot more out there in that higher price range than there are in the lower price ranges. That's for sure. We're with Guy Giles from Bank 34 Mortgage. He's our resident mortgage guy on the Real Estate Show, and Brad Bennington, the CEO of the Southern Oregon Builders Association. They're with us today. And Guy, let me ask you a quick question. You said you've been seeing some refinancing going on, people coming in and refinancing properties. I would assume they're able to do that because they got more equity in their home, but what are they refinancing to and for? Why would you refinance today?
Well, a lot of it has to do with, like I was mentioning a little while ago, you don't always have 20% down when you buy a house. One of the couple that I'm going to refinance this week, we're at that point where they don't need to have mortgage insurance anymore. So that's going to save them a couple $100 right there off of their old FHA. So they've been in their house a few years now, and they're going to pay off a little bit of debt with it. In some certain circumstances, that's not a bad idea. It's going to save them about $1,200 a month.
Now, how can I get rid of my mortgage insurance? Say I've got mortgage insurance, Joe. You have it in your house? Mortgage insurance in your house? You do? Yeah. Well, how does he know if he's got 20% equity in his house that he can get rid of that? How do you go about doing that?
Well, the real answer that everybody wants you to know is that it'll automatically come off at 78%. I actually saw Bank of America one time. Actually, I don't mention bank names, but if I was to. Anyway, they kept this mortgage insurance on these people's house for 12 years or something like that. It was way beyond that point. But, it's supposed to, there's laws now that it'll automatically come off at 78%. But you can talk to your lender, and see about just having an appraisal done, find out what their process is to get rid of that. So a lot of times you don't have to do, I'll talk myself out of doing some business here, but you can a lot of times just get rid of that without it, especially with this market appreciating like it is. It's insane. They do want it for a little while because they've put it on the house and whatever. So, there might be a little bit of a fight or a few restrictions, just depending on the mortgage insurance company and everything. But it's worth starting to look into for sure.
So refinancing is kind of, for some people, makes sense then, is what you're saying.
Yeah, I have another person pulling some cash out of their house, and they're, it still pencils out where they can go buy an investment property with some of that money that they're pulling in.
Well, and I've had people talk to me this week also about 1031 exchanges, of having some properties to redo and investment properties and kick that tax can down the road, because you never know. the 1031 exchanges are on the chopping block, perhaps in the Congress, that we've been notified. Well, Brad, before we get out of here, I want you to know there's so much going on in the building world right now, and there's so much coming down the pike, as we've heard you talk about. I want to ask you about zero net homes, zero net energy homes. They're coming our way.
Yep.
You're going to have to build them. Are the builders ready to start this type of construction? Because it's very different. I've been in a few of these homes, and they're very different.
They have no idea.
They don't?
The thing is this is a moving target. This whole zero net idea is very, very, very much in its infancy. They're still trying to figure it out. The governor has.
She wants it badly.
It's very important to Governor Brown to do this. There's some people in her administration that are trying to drive this thing. Unfortunately, there's a lot of it that's still being the standards that are being developed and so on and so forth. This is a great time for me to mention that Builders Association is providing a building code class this November 7th. It's down at the library. We're having a code expert come down from Salem teach the class. If you are one of our members, it's free. It's entirely free if you're a member. If you're not, it's only $75. But let me tell anybody who's listening, if you're a builder or if you have something that's being built, anything on which a permit is pulled and construction starts after January 1, 2018, you're going to have to comply to this new code. It's very different. And if you don't, you're going to wind up tearing out a lot of stuff that just got built, and you're not going to be very happy about it.
Because if you pull a permit and then the inspectors come and you haven't folled it, they're going to make you redo it, right?
Right. As long as you pull the permit, whatever code year that you pull your permit in, it's the prevailing code. You're okay. So anything that you pull a building permit for from now until December 31, 2017, you're going to be under the current code.
Okay.
Anything that gets pulled after January 1, 2018 is going to be under the new code, and I promise you it is not going to be business as usual. So get signed up for our code class
just
on
give me
November
one
7th.
thing why? Well, what is it that makes it so different?
Right. So a lot of this is being driven by energy, and some of it's being driven by structural. So just one thing, and this came up the other day, is the attachment structures for certain types of decks has been changed. So now the structural code wants decks to be just as structurally secure as if it were part of the house. And they used to say, well, decks, people don't use decks that much. The loading is different. The use is different. But this new change changes how decks are framed. So it used to be done one way. Now it's going to be done another way. And the old way is not going to work. And then the big driver is going to be energy code. The energy code, 5 pages, double spaced, both sides of the paper. I've seen it, and let me tell you, it's breathtaking in its scope and reach.
In just that, it just. Why do you say that? I mean, what about that?
Yeah. So, the thing about energy code is that structural members are also thermal conductors. So they want less. Part of this new code is they want less studs. The stud is a structural member, that goes in vertically. So to get this energy code up, you're going to have
double stud it, right?
Deeper spaces,
bigger walls where you put insulation
more
in,
thermal separation, tighter air standards.
I saw one of these zero net homes where they built the home and the outside, and then you go build the inside of the home. I mean, it's totally different from what we're used to seeing done.
One simple change is all lighting. All lighting
is LED lighting.
LED lighting, no more incandescent. Incandescent lighting not permitted. Government
things
says
like that.
Government says you can no longer have incandescent lighting. Bad.
Hey, I want to mention one thing before we take off.
Yep.
One of the coolest little houses in my neighborhood up on Cloudcrest at 4713. Sounds like you and Alice are going to be doing an open house up there on Sunday. So you guys might have had a price reduction.
And prices come down a lot. One of the things in that particular place that you find about, are stairs and issues and access and all these kind of things, the steepness of driveways, all these things buyers are looking at, aren't they?
I moved out into the country, and I still drive back to my old neighborhood because that's been my neighborhood for the last 20 years just because it's pretty. So go check that place out. All the trees are old and nice.
All right. Well, that's going to do it for the real estate show. We'll go ahead, Joe.
Net zero doesn't just sound good to say that.
Yes.
And when I say that, I'm saving the world. So,
But if you have Joe,
heck with the
all right.
consequences.
Yeah, but if you have zero energy costs out of that for your home, then does that make sense?
I think gradually you have to grow into that. I don't think we can do it in 3 years.
All right. Well, thank you all. You can get a hold of Brad or Guy anytime. Guy.Giles at Bank 34 Mortgage. That'll do it for the Real Estate Show this week. Have a great week, everybody. God bless you all. We'll see you next Saturday right back here on KMED for the next Real Estate Show.
The Real Estate Show on KMED Radio, presented by the Rogue Valley Association of Realtors, along with John L. Scott Real Estate of Southern Oregon and Bank 34 Mortgage. For guest contact information, download our free app, or to watch a past show, visit us online at realestateshoworegon.com. This show is produced by Table Rock Productions. Join us again next weekend for Southern Oregon's one and only Real Estate Show on KMED. And thank you for making the Real Estate Show part of your weekend.